another article written by Kevin Pangle from Evergreen Mortgage here, which is really quite an interesting one that talks about, we always hear all of these changes that happened in the mortgage industry, and what does that mean? And this article really does a very, very good job of talking about the national mortgage licensing system, which is a way that the consumer can track the individual mortgage brokers before they go, so that it's sort of a lifetime number that's assigned to each of these folks, so that you can find out, how that works. There was also, as a result of the 2006, 2007, 2005, 2006, what was happening where people were literally borrowing money, going and putting a down payment on a new home to be built that they had absolutely no intention of buying, because property prices were moving up at such a rate that they knew that it would be worth $20,000, $30,000, $40,000 more by the time the 4 months passed for the construction period. So by putting, $10,000 down, they could wait for the home to be completed, and by the time it was completed, sell it to somebody else and make $20,000 or $30,000. So basically what happened is the lending process implemented a 90-day flip period in there, so that there's 3 months there where you can't just secure a piece of property without securing financing and actually buying the property. You're not allowed to put yourself in a position to flip that. And they also, as everybody knows, changed the relationships on what they call the ATR, the ability to repay. You want to know that your income can repay the loan during the time of the loan. So there's some people that say, they want to know everything. They want to know my blood type. They want to know that. But in the overall picture, it makes our buyers much more stable going in, which in turn makes our economy much more stable, which in turn reduces the risk of the big bubble, the big burst. The tighter mortgage insurance requirements. TRID has been a real interesting thing, and I don't even know what the heck the acronym stands for, but it's basically, it was just another incarnation of it, was just implemented here October 3rd. And one of the things that we're told in the newspapers and all that was it was going to take longer to buy a home, and it was much more rigorous and all of that. But the whole entire program is set up to benefit the buyer, so that when the buyer, unfortunately, that it's sort of all compiled closer to the end of the transaction instead of at the beginning of the transaction, but it breaks out absolutely every associated expense that went into purchasing that home. What it costs, in many cases, it even includes the cost of your home inspection and a number of other things that are in there. So another really good article, and it's sure well worth the read. And if ever the Ben Bulletin's been worth spending $1 and going down and get a copy of it, today may be a good time for that.